Now that the official numbers have been revealed for General Motors and Ford in North America in 2023, it's very clear that what Cathie Wood said was, well, it was pretty much on the money. Ford and General Motors were doing lip service for EVs. They weren't really taking it seriously because they lose too much money on every EV they sell. Cathie Wood is saying now, after we've seen the sales numbers here for GM and Ford, that they were nothing like what those companies promised, that Ford and GM's planned EV slowdown in 2024 and likely 2025 will benefit Elon Musk and Tesla. Hello my friends, welcome to the channel. I'm Sam Evans, great to see you, thank you for tuning in. Cathie Wood believes that the decision by GM and Ford is catastrophic and that profits will roll in only when the companies ramp up their production. So she's basically saying they're going to continue to lose enormous sums of money. There's only one way to get around this, and Chinese EV companies have told them this. Why do they not listen? I can't understand why they don't listen. Chinese EV companies are basically saying, General Motors, Ford, we're not telling you, but we're telling everyone, you've got to manufacture at least 500,000 electric cars before you can start breaking even. That's your break-even point. I mean, it depends on what country you're in, of course, but clearly, they're nowhere near those numbers. General Motors delivered only 75,000 in 2023. And it said it would be nearly on its way to beating Tesla with 1 million deliveries in 2025. I mean, imagine what they would need to do to make that happen. They are nowhere near that happening. Clearly, Cathie, well, people say she's crazy, but she's pretty much gotten it right once again. The deceleration of the electric vehicle segment by legacy car makers General Motors and Ford is a misstep that will benefit Elon Musk and Tesla, said Cathie Wood, the CEO of ARK Invest. Wood founded ARK Invest in 2014 after her idea to float exchange-traded funds for disruptive innovation was shot down by her employer at the time. Over the years, the private investment management fund has introduced several exchange-traded funds focusing on genomics, autonomous technology, and robotics, space exploration, fintech, and innovation. I mean, it's kind of the future, really. Before the pandemic, ARK Invest exchange-traded funds yielded returns of 120% and managed over $17 billion in assets. The company also planned to float a Bitcoin-based exchange-traded fund, but has not received approval from the US Securities and Exchange Commission to do so. InterestingEngineering.com says that given the disruptive nature of her own business, it is no surprise that Wood is bullish about Elon Musk and his ventures. And she's not the only one. I mean, investors like Gary Black believe that Tesla will be worth $4 trillion by the end of the decade. There's numerous. Ron Barron says similar things. There's a lot of investors who are very wealthy making some pretty wild predictions for Tesla stock. That includes Elon Musk. He thinks the company could be worth more than Apple and Aramco combined within the next 10 years, which would mean a valuation of well over $6 trillion, meaning it would be worth far more than what it's worth today by many multiples. After Elon Musk changed the perception of EVs in the automobile industry worldwide, Wood anticipated that established car manufacturers like GM and Ford would swiftly enter this segment. General Motors, which had ambitious plans to roll out 400,000 electric cars entering mid-2024, has scaled back its target while postponing the production of the Chevrolet Silverado and the GMC Sierra pickup trucks by a year. In December 2023, Ford announced that it would have halve the output of its F-150 Lightning pickup truck, while also lowering targets for its EV battery factory. The key reason: it lost $4 billion selling EVs in 2023. It loses $36,000 on every electric car it sells. Both companies have cited slowdowns in the EV market and mounting losses in the segment while making those decisions. This decision, though, of course, favors really two companies, BYD and Tesla. According to JD Power, as many as 870,000 EVs were sold in the US in the first 10 months of 2023. Clearly, that number has now hit well over 1 million for the year of 2023. This figure represents a more than 50% increase compared to the previous year. But if General Motors and Ford, for example, had have, well, produced more EVs and done a better job at it, well, that number could be much higher. Executives at legacy car maker companies have said that they were expecting this downturn and are scaling down production until the industry regains profitability. But not all of them are saying this. Volvo, Hyundai and Kia are saying, no, that's a stupid idea. We are most certainly not doing that. There is definitely EV demand. You just have to be selling the right kind of cars at the right prices. Wood believes that the decision is a huge mistake for General Motors and Ford, and profits will roll in only when companies ramp up their production. The investment fund CEO argued that legacy car makers were forfeiting valuable learning experiences by scaling back their efforts, and cost reductions would materialize only if they maintained production levels and actually grew those numbers. According to Wood, this hesitation will play into the hands of Elon Musk and Tesla. I mean, that's pretty obvious, allowing them to secure a larger share of the EV market due to their extensive portfolio. Not only Musk, but anyone eager to enter the EV market. It's basically giving them the opportunity to get more market share. It's saying, Hyundai, Kia, take more market share. Rivian, take more market share. Tesla, we're going to give you some time to manufacture your Model 2 en masse in Mexico. We're going to give you some time to make these mega castings to make your EV costs even cheaper than what ours are today. Tesla makes a profit selling EVs. General Motors and Ford don't. What are they going to do to catch up? Well, slow things down. Slow down innovation. Slow down sales. This, in my opinion, is a pathway to disaster. But not everyone agrees with me. Cathie Wood does. Do you? Let me know what you think. Thanks for watching.